Ladies and gentlemen, good day and welcome to the IPCA Laboratories Q1 FY2024 earnings conference call hosted by DAM Capital Advisors Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Nitin Agarwal from DAM Capital Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to IPCA Labs Q1 FY24 earnings call hosted by DAM Capital Advisors Limited. On the call today, we have representing IPCA Labs management, Mr. A.K. Jain, Managing Director, and Mr. Harish Kamath, Corporate Counsel and Company Secretary. I will hand over the call to the IPCA management team to make the opening comments, and then we'll open the floor for questions. Please go ahead, sir.
Thanks, Nitin and DAM Capital for organizing this call. Good afternoon to all participants. Thank you for taking out time and joining us for Q1 FY24 earning call. Today's hearing, the call and discussions and answer given may include some forward-looking statements based on our current business expectations that must be viewed in conjunction with risk that pharmaceutical business faces. Our actual and future financial performance may differ from what is projected and perceived. You may take your own judgment on the information provided during the call. Domestic formulation business has delivered a growth of almost around 14% for the Q1 FY24. The impact of NLEM product price reduction in Q4 FY23 of around 16% on price control segment was partially offset with WIP-based price increase taken in Q1 FY24. With 2 ranks gain over FY23, IPCA's rank in chronic segment and we have maintained 15th rank in acute segment as per IQVIA in this particular period. And IQVIA TSA audit met June 23. IPCA has achieved a growth of around 13% as against industry growth of around 11% as per IQVIA data. Export formulation business, more particularly a branded formulation business in Q1 has delivered a growth of around 23% for the quarter, from 93 crore to around 114 crore for Q1 FY24. Our generic business, excluding institutional business, has delivered a growth of 11% in Q1 FY24 from rupees 212 crore to around 235 crores. Institutional anti-malarial business declined from 97 crore in Q1 FY23 to 48 crore. The business is impacted largely due to lower business volumes from artemether lumefantrine and artesunate amodiaquine formulations. There were lower procurement by the global agencies and lower business of artesunate injectable due to plant shutdown for upgradations of sterile artesunate API section, which is now is operational, and it may take around 1 more month to get its approval from WHO, and business will resume, but we have already started the production of injectables here. API business in Q1 FY24 declined by around 23% from 384 crore to 295 crore for the quarter, mainly due to significant decline in anti-malarial API business for the quarter from 63 crore to 19 crore, a decline of almost around 44 crore due to poor demand of all anti-malarial APIs. The price decline on certain APIs due to significant decline in key KSM prices in the market has also impacted the overall value of the businesses. Overall business guidelines for FY24, domestic business, we expect that industry will grow around 10% and our growth may remain around 12 to 14% for the domestic business. That's our guidelines. International branded promotional business, we expect a growth of around 12 to 14%. The lower business growth is projected due to depreciation in ruble. Ruble has already touched almost around 96, 97 level, and there will be some impact on foreign currency realizations on that. Our generic business is expected to grow by around 7 to 8% in this particular year. Institutional generic anti-malarial business is likely to decline by around 15% due to lower demand and also due to the anti-malarial injectable, particularly artesunate injectable, because plant was closed in the first quarter of the current year. In API business, we see a decline of around 10 to 12% in the business due to lower realizations of APIs due to softer KSM pricing and also because of some decline in demand of anti-malarial API. For FY24, our overall growth forecast, because of all these factors, more particularly on decline on institutional anti-malarial business and also likely decline of API business, will be likely to be around single digit to maybe around 6 to 8% for the year. On business margin front, we expect our material cost to sales ratio to improve from around 35.5% in FY23 to around in the range of around 31.5 to 32%. On improvement of this will deliver an improvement of around 3.5% to 4% for the year. It's mainly due to business margin improvements on formulation business with lower input costs and overall improvement in productivity of the field force. Further cost optimizations and drive in API production, and overall we expect that EBITDA margin for the FY24 our expectations is around 19 to 19.5% for the year, as against 16.22% in FY23. Having given the broad numbers, now I request participants to ask the question.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Thank you for the opportunity, sir. So the first one on the EBITDA margin guidance of around 19 to 19.5%. This you had said on the base of 16.5 is what we said, right? So the base also.
Yeah.
So the base also includes other income and the guidance also.
No, we have excluded other income from both places now. Now our guidance will be excluding other income.
Okay.
We have excluded, yeah.
But if I exclude other income from last year reported number, I mean, I get some around 927 crore EBITDA with a 15% margin.
It's around 16.22, excluding other income. Yeah.
Okay. Sure, I'll check my number then. So basically the entire, let's say, 300 basis point margin improvement, we are expecting from more or less gross margin improvement is what we are suggesting. Is that the right way to understand?
Yeah, it's a gross margin improvement, yeah.
Okay. And, let's say probably because of the lower realization this time around API business is declining. But let's say beyond FY25, what is the growth trajectory that we are aiming for this business?
Overall, we should be, I think this year is, by and large, this anti-malarial business is facing some problem because of lower demand from WHO business also, and also your domestic business of API, we have seen good significant decline in first quarter, and API exports has also declined in this particular quarter. So we really see that anti-malarial demand may be lower in the current financial year. But as far as WHO business is concerned, now we have started receiving good orders. And injectable business is largely impacted because of our plant was closed in the first quarter, and we do almost around 90 crore worth of your anti-malarial injectables exports, artesunate injectable exports to all these global agencies. So that business is impacted, but on normalized basis, I think next year we should be able to deliver much better growth of around 10 to 12%.
Sure. And on this plant closure for the injectable artesunate, any particular reason that we have closed that plant, and when is it expected to come back online?
That was basically we wanted to upgrade our sterile artesunate API section. So that work is already completed and product is validated, and we have filed with WHO all the validation data. So normally it takes 60 days time to get an approval. So it's almost around 30 days are over. So maybe in a month's time we will get approval. But meantime we already started the production here. So maybe I think up to September there may even August and September will also get impacted because of the shipment will start happening only after your approval from WHO will be received for all the applications. Yeah.
Sure. And you said 90 crore is what the annual run rate is for this shipment?
Yeah, injectable business is around 90 crore.
Annually?
Annually, yeah.
Okay. Thank you, sir. I have more questions. I'll join back.
Yeah.
Thank you. Reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for that. Am I audible, sir?
Yeah.
Yeah, okay. So first question is on the gross margin front. So is it fair to believe that last 4 quarters where the gross margin levels were like 63, 64 in that range? So that was a kind of a phase of aberration, and now we are come back to normalcy. And if yes, so what is driving this? So like the challenges of the APIs is now history. That is how we should think, or the cost optimization thing, or the input prices are corrected to such a significant level. So hence the benefits that we've driven. So could you give some more color to this, sir?
I think that, let's say, formulation business improvement is good, so that is also driving. Then input costs are also lower, that's also helping. And normally, the current year also, your API business is lower. API margins are normally lower than the formulation business. So overall on mix, also margins are improving. So, and plus on API side, we are also taking furthermore the cost optimizations and other drives. So that is also resulting in a better margins on API. So overall, all these factors will result into almost around 3.5 to 4% kind of improvement in the gross margins. Yeah.
And this is a sustainable one?
This is sustainable one, yeah.
Okay. So the second thing is about the Unichem acquisition. So what is the way forward, sir? In fact, the first part of the trade, so obviously that has happened. And so as you are mentioning that once the majority stake, controlling stake that you acquired, then you will start integrating because the management control that you will be having. So could you throw some light to that acquisition?
I think our open offer is opening on 28th of August, and which will close maybe around by 8th September or so. And all the payments will be made by around 20th of September, around 20th of September. So practically by maybe September end and all, the whole process of integrations and all will start. But we have already started working on which are the products on which the market extensions are possible, and we have started interacting with some of their teams. So, but on practically on ground, the actions will start only after completely we are in the management here.
So that in number integration or the integration of the financials will only happen after the after the completion of the
Philip, it will start from September end. Because hopefully everything should be over by September 20, and we should be having management control over that company. So second quarter result consolidation will happen from the date we got those control.
Okay.
Maybe I think few days consolidations would happen, but I think the major part will start happening from the
third quarter onwards.
Third quarter onwards. Yeah.
Okay. And sir, coming back to the domestic formulation business of IPCA, so positive surprise with the 20% plus kind of a growth and all that. So any one-off kind of a contribution that you have witnessed, or how is it, sir?
No, we have done, I think, a business growth of around 14% in domestic formulations. Yeah. And that is on the back of, let's say, our most of the therapies are doing well. In fact, if you look at the business growth, what we have in, let's say, pain management has delivered around 15% kind of growth. Cardiovasculars and antibacterials more or less around close to 10% kind of business growth on that. Then your CNS business has grown by around 21%. Derma business has grown by around 24%. Your urology business has grown by almost around 26%. Ophthalmology by 15%. And Nutra, we have small business which is declined by around 11%. And cough and cold business has delivered around 11% kind of growth. Only segment where we have not received good growth is antibacterial, which the business growth was only around 5% in this quarter, on the first quarter, yeah. So rest all businesses has done well in the quarter, and both on acute and chronic, we are beating the market. In fact, on chronic we have had a 2-rank jump in this particular period, but on acute side we have maintained the rank which is 15th in the overall as per IQVIA.
Okay. So, sir, is it right that in the previous quarter we had seen some kind of a pressure for our key brand like Zerodol and all, and now it is normalized? Is that the right understanding? And also about the field force addition that you had in the recent past, whether it is fully captured and you have started seeing a kind of at least expected level of a kind of contribution from that field force expansion?
Yeah, field force expansion is also resulting in much better now, and that is also helping us, like say your CNS business growth, because we have started one more division, so business growth is much better. In fact, on our rheumatoid arthritis division, the second division has become, in very first year, it has become productive and started delivering very good growth and margin also. So, and in cardiovascular, that one division which we have launched, which is Cardinova, and it has reached to break even in very first year. So, and another division which we have added, it may take one more year to get to the break even. As far as the pain segment, in more particularly on the Zerodol side, in that division also we have added almost around 300 people, and there also we are seeing that overall good traction. But overall pain market itself, the growth has come down, and therefore earlier we used to have around 19% kind of growth on pain segment. This quarter we had a growth of around 15% on pain segment.
Okay. Yeah. Yeah. So I think that is all from my side. Thank you. Thanks a lot for this.
Thank you. The next question is from the line of Vaibhav Badjatya from Honesty and Integrity. Please go ahead.
Yeah, sorry, there will be some disturbance, so I will come back in the question queue later. Thank you.
Okay.
Thank you. The next question is from the line of Rohan Vora from Purnanta Investment. Please go ahead.
Thank you for the opportunity. So my question was that when would we start seeing operating leverage flowing in from new field force that we acquired? We hired in the last 1 year, and the freight cost that has normalized. So when would that start flowing into EBITDA margins? Thank you.
Let's say freight cost has already normalized, and therefore you have seen that our your other income and energy cost is also somewhat stabilized. And therefore, in this quarter, if you see your manufacturing and other expenses has just moved by around 3% or so. So there is not much of increase in other expenditure. And as far as productivity is concerned, let's say the major people who are added, one is in the cardiovascular, rheumatoid arthritis, and also in the division where we are marketing Zerodol. As I have already said that almost around 300 people are added, close to that number in our rheumatoid arthritis second division what we have started. That has become productive in very first year. On cardiovascular, we have started 2 division more. So one division has already received a break-even in very first year. Second division will receive break-even, I think reach to the break-even level in the next financial year. On Zerodol range where we have added people, that is also resulting in the overall productivity increase. But overall on pain side, if you look at, we were growing by almost around 19% or so. This quarter the growth is lower because pain market itself growth has little come down. Then another area where we added the people was one in CNS segment, and in very first year that division is also becoming productive and above break even. So overall the addition of the people, only division where the people will take a little more time to become productive is the ophthalmic division, where it will take almost around 3 years for people to become productive and start delivering break-even. So it has been a, let's say, good additions, and we have already started gaining the productivity.
Okay. Thank you.
Thank you. The next question is from the line of Harsh Bhatia from Bandhan AMC. Please go ahead.
Yeah, hi. Good afternoon. So I wanted to clarify one of the earlier statements that you made in terms of the guidance, 10 to 12% decline in the API business. So there is one element of the malaria API pricing taking a hit. Is there anything incremental that's happening on the non-malaria API side?
Let's say the major impact has come of malaria, and also the impact has also come because all KSM prices are soft. And because KSM prices are soft, the API pricings are also soft. And more particularly on sartans, your starting material used to be around $18 to $20 has come down to almost around $6 now, $6.50. So it's a significant decline on the KSM prices, which is resulting in the, let's say almost around the price of losartan in the market used to be around $100 to $120. Now it's come to maybe around close to the level of 55, 60 level or so. So there is even though you have similar kind of volume, then because of price decline, your revenues are declining. So that is also resulting in overall lower numbers for the API business.
Okay, so it has more to do with the pricing aspect and very limited to do with the volume aspect.
I think on KSM level, significant price declines has happened, and that is resulting in, and practically now it's at, practically the KSM manufacturers are losing money now at that level. So it's not that these things will continue for very long. It may be a matter of 6 months, the KSM prices will again start rising.
Okay, and this shift in this KSM prices, is it happening from the domestic manufacturing side or is it happening from the import aspect?
Because import it is more, and the domestic producers are also, they have to match the prices, otherwise they will not be able to do the business. So it is from, but it is more driven by the your import side, and domestic people are matching the pricing.
Sure, so that's helpful. And the margin guidance, this time we are giving X of other income, the 19.5%, this is purely from the base business aspect, right? That does not include any aspect of the Unichem consolidation for the entire year.
There is no Unichem right now in our, because Unichem has not become still our, we are not in management right now. So we will, once your open offer get completed and everything, then only consolidations and everything will start.
Sure, sir. And if it is possible, can you help us with the productivity of the Zerodol division, if it's possible? the PCPM number?
Normally, we don't give the division-wise productivity number, but overall, let's say our company as a whole on a field force size of almost around 6,000 to 6,180 people, overall monthly productivity is around 4.22 lakhs, which last year, same period, it was 4.08 lakhs.
Sure, sir. That's helpful. I'll join back in the queue.
Thank you. The next question is from the line of Naresh Sudhar from SBI Life Insurance. Please go ahead.
Yeah, thank you for taking my question. Sir, your guidance on this year's margin, 19.5%, this includes the favorable mix in terms of higher India and lower API and other export markets. So next year when the product mix normalizes, will you see some part of benefit reversing and in FY25 the margins being similar to FY24 level, or do you see more improvement from FY24 level?
The margins will definitely improve because our the formulation business is rising faster.
Okay, so the reversal in terms of the product mix.
Productivity of people will also go up.
Okay, so can you quantify how much product mix led the margin expansion we are seeing in FY24?
We have done the working on overall basis, so I have not done the working on each element wise. Maybe I think when the next time we have next quarter call, I think I will get those numbers also ready.
Okay. Thank you, sir.
Thank you. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Yeah, thank you for the opportunity again, sir. But sorry to harp back on this topic, but somehow when I recheck my number, without other income, we were at around 15% margin. So I'm not sure where the discrepancy is coming from for the last year, I'm saying, on a consolidated basis. And if I include other income last year, it would be 16.5.
We are speaking all numbers on standalone basis, and I think you are going for consolidated.
Okay, sure. And sir, this quarter then, any drag from some of our, other subsidiaries like Onyx, Pisgah, if you can share some color there would be helpful.
The drag is only around 3 crore, I think, in the first quarter, and things are improving there. On consolidation basis, if you look at my numbers, on standalone, your profit after tax is around 166.58, and after giving the impact of consolidation, your the PAT number is around 162.82. So it's around 3.76 crore. Yeah.
Sure. And sir, any details on our capex plans and any update in the existing work for the plants that is going on?
Overall capex in current year is likely to be around 300 crore. The major additions is due to the one biotech plant which we are building up in MP.
And then what would be the gross, the capex investment there and bioreactor capacity?
It will be almost around 150 crore.
And the bioreactor capacity for that?
I think it's the 1,500 liter, I think 2,000 liter is that's the kind of reactors are there, and 1,500 liter or something of that idea.
Okay. And this would be focusing more on the India and emerging market?
No, it's a developed market also. We have taken opinion on our clinical protocols from Europe, UK, and I think US regulators also. So our clinical designs are all based on those kind of taking those inputs. So filing will be for global market, yeah.
Sure. And then last one on the KSM pricing, you alluded that KSM prices would again probably start going up. So to that extent, we would also be able to take the API price hikes. Is that the fair assumption?
Yeah, it's a fair assumption, yeah.
Okay. So we'll have those contracts in which there'll be escalation clauses based on case and prices, right?
Normally, we don't sign the long-term contracts for API side. It's so it's only with MNCs or some kind of those customers. It may be around 6 months kind of contract. But then the prices. And in past also we have been adjusting the prices. So there are no issue as far as passing on those kind of costs.
Okay. Perfect. Thank you. Thank you, sir, and all the best.
Thank you. The next question is from the line of Rahul Javani from IIFL Institutional Equities. Please go ahead.
Yeah, thanks sir for taking my question. Sir, our Concall EBITDA margins last year were 100 basis points lower than the standalone EBITDA margin. So do you think a similar drag would be there in FY24 as well from the various subsidiary of ours? Or do you think this drag will come down?
The drag is already coming down. It's practically this quarter, this is around 3.5 crores. So, and things are improving. So, drag will come down.
So that 3.5 crore drag is at a PAT level. So, what would be the drag at the EBITDA level for 1Q?
There is not much difference between, most of those companies, there is no finance cost and only some depreciation. That's all, not much.
It's around 0.5 percentage point, yeah.
Okay, sure, sir. And sir, after this acquisition of 34% stake in Unichem for 950 crores, what is our cash balance as of now? And after the open offer also goes through, do you think that we will have some sort of an higher interest expense going forward?
Interest cost is, let's say, overall our borrowing level will remain around 1,000 crore or so. Net borrowing. Since the interest rate has moved up both on Indian rupee and your foreign currency loans. Earlier, all the foreign currency loans were very, very cheap. So now the interest rate is almost around 7.5% kind of interest rate. So at that level, your overall finance cost may be around 100 to 120 crore for the year. Yeah.
After factoring in whatever you need to pay for Unichem acquisition.
Yes.
Okay, sure. So that's it from my side. Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. Well, if you can just update us about your USFDA facility inspection for the plant and what is the kind of expectation on that US business front so far as our portfolio is concerned?
Let's say we have all the 3 sites are inspected and we have already replied. There are no issues as far as there are no repeat observations and also there are no any kind of data integrity kind of issues. So we hope that hopefully we should get cleared and I think it's only a matter of time because I think somewhere a plant inspection was closed in June, mid of the June. So probably 90 days thereafter or so, I think hopefully things should, we should hear from regulators.
Okay. So then, sir, hypothetically, if we assume that, let's say, hopefully things are getting resolved by the second quarter or at best third quarter. So what would be our business model there in the US? So our focus would be API to start with the old API product or and the old file has to be activated. What will really happen and what time frame that you anticipate to see some supply happening from your Indian facility? And how would that be complemented or not impacted by, let's say, Unichem acquisition? If you can share something about that.
Let's say, I think Unichem has a much bigger platform of US sales, so we would like to integrate those kind of platforms. So it will be maybe that that will become our front end. So we will definitely look at that. Right now, it will not be right on my part to comment on that part. So, but we don't know how long it will take because sometimes the import alert lifting may take some time. So right now, we cannot say that when the business would start. So we will take call around that time, but our focus is likely to be more on formulations, not on API.
Okay, fine. And about the formulation exports, that when you are talking about the formulation business growth is looking strong. So could you talk something about the formulation export, which has been subdued a bit since some time, and whether your this challenges what you have been facing in Europe and particularly in UK, all those things got resolved, and what is the current outlook in the key market that you are having for the formulation export?
I think Europe has delivered very good growth. The UK has started coming back. I think Europe, which include UK also, last year first quarter the business was 73 crores. This year first quarter it's around 119 crores. So there is almost around 63% growth, and this trend is continuing. I think for whole of the year, the UK may delivered almost around 130 to 140 crore kind of business as against 64 crore what we had in last financial year. So overall, we are seeing good traction from European market and other markets like Australia, New Zealand, and except South Africa, where we may see some kind of decline because some of the tenders we have lost there, and your Canada business may remain some muted. But Australia, New Zealand, and European business will do well. And so overall, looking at that, we have given the guidelines that in the current year, or on generic formulation side, we should have around 7 to 8% kind of growth. First quarter, we have seen a growth of around 11%. And on institutional generics, because of your first quarter up to second quarter, the business impact on injectable. So that will also result in lower growth. And first quarter, your anti-malarial WHO pre-qualified formulation business was lower. Of course, the orders has now started coming in, and good orders are there in hand. But that will definitely impact not only first quarter it has impacted, and some impact will be there of these two factors in second quarter. But on third and fourth quarter, there would be recovery, good recovery.
Okay. And just one last question, sir, about the facility. So when it was, Unichem was not there inside, so we had a plan of having an end-to-end integrated operation by activating that Novel Explio site in Nagpur. And hence, KSM dedicated facilities in the Nagpur site and all. Now, with Unichem facilities are getting added post the acquisition, what thought process that we are currently having about capacity build-up and for the integrated operation, what we have been thinking long back?
We already have good amount of integrations in from API to formulations. Close to almost around 54-55% of our formulations are based on our own APIs, overall on the company as a whole. So we have.
I was talking about the KSM integration, sir.
KSM integration part, we are already working. We have set up our first plant on continuous process. And I think that plant should start operating from maybe around October or November side. It's under installation right now. And once the validations and all start, I think from that side, first product for your furosemide, one raw material will start producing in-house through the continuous process. And we have around 2-3 more candidates in pipeline on which we are currently working, and so far we have not placed the order. We will learn from this particular the product, and thereafter we will place the order for the And the plant cost is very small. It's not very large. This continuous process plant for one of the KSM which we have set up maybe around 25-30 crores. So it's the plant cost on continuous process is not going to be very high. But overall, it will result in much better throughput and also lower overhead cost.
Okay. And if you can update about the Devas site commissioning and execution and utilization, sir?
Devas site is so far not inspected by any agencies. We have started filing. I think 4 products are validated from there and filed in various markets. Furthermore, validations are happening from that side. So maybe I think by year end or so, we may have some kind of domestic business or some small business coming in from the markets where no such inspections are required. But probably I think in the second half of the current financial year, some inspections would start happening from European authorities and others. And thereafter the business will scale up. So for one year, we have already discussed it earlier also that this is a cycle one has to follow, that you do follow validation of the batches, generate the 3 batches and thereafter file with regulators, and once they approve inspect the plant, then only the business and approval come, then only all these export business will start. So I think current year also this plant will continue to have losses. Yeah.
Okay. Yeah.
One more. We do the validation of products. It's continuously establishment and validation of products will do, and generate stability data and filing work is currently happening.
Just last one, sir, on the sartans. So, which used to be our, or which is the key product for our API portfolio, we have seen some impurity challenges along with the industry last year, and we have been trying to have new modified process approved from the regulators in the Europe. So that possibly we have already done. And also in the recent past, we have seen enhanced competition from the domestic leading large players also, so far as API is concerned. So now, having seen all these impurity challenges in the recent past and the enhanced competition, what's your outlook that you are having for your key portfolio, that is sartans?
I think impurity challenges which were more particularly on nitrosamine and azido impurities and all, now it's let's say whole industry is working for last 1.5 to 2 years, and most of the issues are now addressed. So this is all the thing of past. Somewhere the processes are filed, somewhere process filings are happening on the newer APIs and all. But recently regulators both US and Europe both have come out with the guidelines further, and we don't foresee any reason on any of our API not meeting those kind of guidelines. So we don't have any kind of those challenges.
But how do you address the competition, sir? Enhanced competition for sartans?
It's basically the cost reductions and on continuous basis working on to reduce the cost and process optimization. That's the only answer. And building the higher volumes. Yeah.
Okay. So that means we can say that sartan portfolio is kind of a normalized after seeing whatever the hiccups in the recent past.
Yes, it is in the process of normalization, because some of the processes which we have reduced cost processes which we have filed, I think some market we have received approvals but let's say in Latam, let's say maybe Brazil and others, those approvals are still to come. So somewhere the costs are still on higher side. Because as we had discussed earlier that our first focus was to come out with a process and so we have filed initially the process which has a little higher cost, and thereafter we have come out with a much better process where the cost is much lower, and that process filings has happened, but some market approvals are still pending.
Sure, sir. Yeah. Thank you, sir.
Thank you. The next question is from the line of Vaibhav Vachadia from Honesty and Integrity. Please go ahead.
Yes, sir. Thanks for providing the opportunity. So just trying to understand from a longer term perspective, that, post the acquisition of the Unichem, I think we can make use of our the Azure platform, which we were earlier not probably able to optimize. So what's your thought on that, and can it contribute significantly to IPCA's profitability on a consolidated basis going forward?
Let's say Unichem is much bigger platform than Azure. And for our future US business, we would like to use the Unichem platform rather than using the Azure platform. So Azure will try to integrate with that of Unichem portfolio. And we will integrate the entire team and other things so that there are more cost reductions on operating side would happen. So that's the line of that's the thinking. But it all will start happening once we are there in the management.
Yeah, but I think Unichem doesn't have any front end, right, which our Azure has. So Azure will continue to be.
Unichem has a much bigger front end. They are almost around more than 30 people. Very good team and very good US business. Yeah.
Okay, got it. Understand. And when you provided your overall number, obviously on a standalone basis, you provided, and we know some of the other existing subsidiaries that you have. But from September onwards for 6 months, the drag will also come from Unichem on a PAT or PBT basis. So just wanted to understand your thoughts on it. Will there be any drag? It will be significant. How much that would be? I don't want exact number, but a broad quantitative commentary would be helpful.
I think Unichem is also improving their performance, and we will only be able to provide you once we are there in the management. Right now, it will not be right for my part to talk of that here.
Got it. Understand, sir. That's it from my side. Rest of my questions have been answered. Thank you.
Thank you. Reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments. Thank you, and over to you all.
Yeah, thank you. Thank you for participating in Q1 FY24 conference call of IPCA. Thank you, all the participants. Thank you.
Thank you. On behalf of DAM Capital Advisors Limited, we conclude today's conference. Thank you for joining. You may now disconnect your